Okay, so the question that we are going to look at here is we're going to look at 2019, question 5b, and we're looking at ratios. So the question starts off first of all, and it says, I'm going to concentrate here first. It says, what is the liquidity problem? Now, liquidity is all about your ability to pay your short-term debts, your debts on a daily basis. So if you have a liquidity problem, you have a problem paying your short-term debts. Now, you have a problem paying them as they fall due from liquid assets, things that you should be able to get cash from quickly. So that particular sentence there has to be learned off by heart. So it's an inability to pay your short-term debts as they fall due from your liquid assets. And it also gives rise to a problem which is called overtrading. So I need to put in there as well, this can cause overtrading. Then in this question it asks you, can you calculate for 2017 and 2018 the current ratio and the asset test ratio? Now there's a few rules when you do ratios. Rule number one, you have to name the ratio. This question was a little bit easier, they gave you the ratios. But if this question asks you to do the liquidity ratios, first thing you're going to get marks for is naming them. Second thing that you're going to get marks for is giving your formula. Now, the current ratio is just current assets to current liabilities. Remember, these are things that you owe and these are things that you own. Now, the asset test ratio is a much stricter test of your ability to pay. Now, the asset test ratio, the difference here is they don't allow you to include your closing stock as an asset that you can get cash from quickly in case your closing stock is stock maybe that is very difficult to sell. So this one says it's current assets, but you have to remove the closing stock. So looking at these, in 2017, the current assets are 40 and the current liabilities are 20. Now the second rule, with doing ratios, you must always have, what way would you be looking at this? This side here must be always 1. So how do you get 1 here? You divide both sides by 20 and you end up with 2:1. Okay, you must always have 1 there. The asset test ratio here is 40, but this time you have to take away your closing stock. Your closing stock is 10, and that is to 20, hasn't changed. So again, do it in small steps, just in case you go wrong. And the asset test ratio is 1.5:1. Okay, doing the same for 2018. Your current assets in 2018 is 62,500 and your current liabilities are 25,000. Again, I need this to be 1. So take 1 here, divide this by 25, that'll give me 1, but I must also divide that by 25. And if I divide 62,500 by 25, I get 2.5:1. Then we need to do the stricture test, the very same ratio, but this time I have to take out the closing stock. So the value of closing stock is 42,500, and that is to my current liabilities again. So I'm going to end up there with a ratio, just take it from here, of 0.8:1. Okay, now we want to do the comments on all of these. Some questions will ask you just to calculate the ratios and that's it. Then some will throw in, can you analyse what they actually mean? So I'm going to give you 2 scenarios, how to comment on them if they're good and how to comment on them if they're bad. So here I say the current ratio in 2017 was 2.5:1 or 2:1. Where did I get 0.5? So that's 2. And the current ratio in 2018 is 2:1. Okay, so did I write down the wrong thing? So I wrote them the wrong way around. So what I'm doing is saying the answer here is 2:1, the answer here is 2.5:1. So we're saying that the trend is good. Why did I write bad there? Sorry. Change that. The trend is good. And the ideal ratio is 2:1. So if you look at this, last year for every €1 I owed, I had €2 to pay it. This year, every €1 I owed, I had $2.50 to pay it. So the trend is good. We're above the ideal ratio, so we will be able to pay our short-term debts as they fall due. So that is good. Okay, and you don't have to do part 6, 7 and 8. We would only do these if they were bad. So I'm going to just read through them in case your answer was below this recommended ratio. If you are below the ideal ratio, that means you will have problems paying your short-term debts. You have to keep using the word short-term debts as they fall due, so that's bad. That's a sign that you're over trading. Now you always, if the answer in your exam is that bad and that you're over trading, you have to give a recommendation on how to fix it. So the problem is here that you don't have enough cash flowing through to pay your short-term debts. Again, I keep using the word short-term debts. If to improve your cash flow, you need to increase your sales, might be one idea. How do you increase your sales? Maybe drop your selling price, okay? Or find a cheaper supplier of raw materials. Now over here, I'm going to comment on the acid test ratio. So the acid test ratio, sorry, I should turn 17. The acid test ratio, just get rid of that there for a minute. Sorry, that's from a different question. The acid test ratio in 2017 was 1.5:1, and the acid test ratio in 2018 is 0.8:1. So let's have a look what this means. Every €1 that you owed, you'd 150 to pay it, not being allowed to include your closing stock. In 2018, every €1 you owe, you've only 80 cents. That's not good. So the trend is bad. The ideal ratio is 1:1. We are not above or equal. So this part here is not relevant for my commenting. So I'm going to part 6. We're below the ideal ratio, which we are. So we will have problems paying our short-term debts as they fall due. That is bad. We are over trading. The recommendations would be, generally you can use the same one over here, your cash flow, improve your credit control. But because this one here, you can look at it, this was so good, your current ratio was excellent, and everything just went bad once we removed closing stock. So the problem occurred when we excluded the closing stock. So that must mean that we're carrying way too much closing stock, and that's putting pressure on our cash flow. So it's difficult to raise cash to pay our short-term debts. So we really need to look at our stock, which would be trying to get rid of it. So increase your sales by having reducing your selling price. Okay, so again, there's loads on the board, but again, you will use either 5, you're going to work with 5 and finish there, or you're going to use 6, 7 and 8. Now, if you look at these, you're going to say, well, these are the same as what's there. You don't have to repeat yourself. You can write them together if you want.